We live. Okay, I want to get you on YouTube live here. I'm going to introduce everybody. We live. Yeah. Alright, so Jeffrey, you're right here, just in case I'm away, but I'm going to be watching. When you get a second, just type Homeownership right there for me. This is the chat feature too. I want to get these out right now. Listening from ATL, they in the chat. Let's go. So I'm going to see if I can just move these out of the way for a second. All you have to do is plug it in and then fade after you press this button to go put me on live.
You said plug it in?
Yeah, go ahead and plug in. Make sure I'm in focus. Let me know when you're ready and I'll start us off. I'm going no glasses. So you remember your camera 1 now? This one's going to be camera 1. Yep. On the screen. You tell me when you're ready and I'll get started, Joe. All right, everybody, we're going to go ahead and get started. Good morning. Good afternoon. Now it just clicked to 12:02, I believe. So good afternoon, everybody. Welcome to Home Ownership 101. You made it, guys. You made it. All right. So to get started, I, of course, want to introduce our first presenter. But, of course, we're in the house of the Lord, Second Missionary Baptist Church, the great Second Missionary Baptist Church that's been serving the kingdom for 101 years now. Amen. Look at how God planned that, too. 101 years, and we're at Home Ownership 101 today. I know, right? God is so good. So I'm going to start us off with a prayer and bless the food. There are light refreshments in the kitchen area, so make sure to swing on over there and get some food if you haven't. There are surveys that are left at each table, so make sure that you complete a survey and leave a physical survey at your table. But there's also a small card for an online survey you can fill out on your phone. So please fill those out as well, because that's going to allow us to specifically get you the assistance that you need, or to find out why you really came today and how we can help you grow or to accomplish your goals. So I'm going to get started with that prayer. There's also folders that have notepads in them. They have note pages in them. So please take notes. Everybody that's watching online, please take notes. There's going to be so many gems today that are dropped, but we only have 2 hours. So you have to take notes. And I do please ask, please hold your questions until the end. Please hold your questions until the end. We're going to go through everybody's presentation. And after everybody's done with their presentations, we're going to have panel-style questions so you can ask a question to anyone that has presented today. All right? This is going to be interactive. This is a workshop. So talk back to me a little bit today, but we're going to start us off with the prayer. Dear Heavenly Father, Lord, thank you so much for this opportunity, Father God, to come together as a community to first say thank you to you. Lord, thank you for waking us up with the breath of our lungs, activity of our limbs, and a sound mind. Father God, we ask that you would please bless the meal that is prepared today, the refreshments that are prepared today, Father God. Allow everybody that's on their way still to arrive safely. Give them safe traveling graces. And those that couldn't make it, Father God, we just thank them for their efforts, Father God, to want to come out. Lord, I pray that those that couldn't make it physically can watch online and the stream goes smoothly, Father God. And Lord, please bless the food that we have prepared and bless those that don't have a meal. In Jesus' name, Father God. And Lord, I pray that this workshop is the spark that starts the fire of financial literacy, of home ownership, of learning to own rather than rent, of being real estate investors. And this leads to so many more collaborations and workshops like this in every city throughout the United States and throughout the world. In Jesus' name we pray. Amen.
Amen.
Amen. So our first presenter today is going to be Cedric Jackson from Up the Score ENT. He's going to talk to you today a little bit about building your credit. Ced, I hope you can teach them how to check their credit score. If not, we have the website where they can do that free today. But without any further ado, Cedric Jackson. Ced.
All right, now give another round of applause for Dorian. We're putting this together. We appreciate you. Yeah, we just need to get the password in here. How y'all doing today?
Great, sir.
I see a lot of familiar faces. I was kind of zoomed in. Can we zoom out a little bit? There we go. All right, so this is an ebook I put together. It's called The Best Way to Build Your Credit to Become a Homeowner. This will be available for everybody. You guys know what credit is? I'm sure most of y'all do. Okay, all right.
Bad credit is.
Right. We're trying to get away from the bad credit. But a credit report is a snapshot of your payment history for all credit transactions that you have beginning from the age of 18. Reviewing your credit report every 4 to 6 months to give you a chance to check for identity theft, inaccurate accounts, and incorrect information. It also allows you to manage your financial situation before applying for a credit card, auto loan, bank loan, mortgage loan, employment, or insurance. For example, if you check your credit and notice that there are a few negative items on your report, you will have a chance to fix those items before applying for credit. By doing this, you will avoid embarrassment of being declined or accepted, but at a much higher interest rate. So, do you guys know how to check your credit report?
Oh, yeah.
Okay. All right. Well, there's a few ways. There's a free one called MyAnnualCreditReport.com, and that'll give you your an accurate credit report. A lot of people use Credit Karma. That shows your Vantage score. I know when you're applying for a mortgage, they look at a different score. There's different scores, different credit scores. So they look at the FICO. Is it the FICO 8? I think it's the FICO 8. And you can check that on MyAnnualCreditReport.com one time a year for free. The best way to build credit to get a home loan. So,
Mr. Jackson,
yes, sir.
is that my annual?
Yes, MyAnnualCreditReport.com. Yeah, you get one free credit report from them a year. And so here's a few different ways, a few different accounts to build your credit. And you want to have a revolving line of credit. That's a credit card, something you pay on every month. And an installment loan like a auto loan or something like that. You want to get those primary trade lines on there to help build your credit up. And those are a few different ones that you'll need. Revolving line of credit, installment loan. And if you don't have any credit yet, you can get secured credit cards and secured loans. Does anybody know what those are? Okay, go ahead.
It's when you put your own money down.
Yes, exactly. That's a good way to build a relationship with the bank or credit union.
What do you mean put your own money down?
Yeah, put your own money up for a secured loan or a secured credit card. So after the term is over with, you get your money back. But they're seeing, they're seeing if they could trust you with money, basically, with your own money. So if you mess up your own money, more than likely they ain't gonna give you no money. You know what I mean? But a revolving credit is a line of credit that remains available over time, even if you pay the full balance. Credit cards are a common source of revolving credit, as are personal lines of credit, not to be confused with an installment loan. Revolving credit remains available to the consumer ongoing. So a secured credit card functions a lot like traditional credit cards. The primary difference is that with the secured card, you pay cash deposit up front to guarantee your line of credit. While credit history may be used to determine eligibility for a secured card, the line of credit it offers requires a security deposit. So yes, that's putting your own money up for a secured credit card or loan. An installment loan is when you take out an installment loan, you immediately receive the money you're borrowing or the item you're purchasing. You pay it off sometimes with interest and regularly scheduled payments, known as installments. You typically owe the same, I'm sorry, it can't, forgive me. You typically owe the same amount on each installment for a set number of weeks, months, or years. In a secure loan, the lender has a legal claim against the borrower's assets. If the borrower defaults, the lender can convert the assets to cash to be repaid. The asset is a secured loan, are referred to as collateral. Okay, right here, we show what a low credit score costs you when buying a home. This might be a little outdated, but you can see a 599 credit score. You're gonna pay on a $250,000 house. You're gonna pay over 300 grand in interest with a 599 credit score, as opposed to having a 730 credit score. The interest, they're paying 2.7%, and they'll pay about 100 grand in interest with the 730 credit score. So low credit can cost you a lot more money. It's better to build your credit up before going to apply for things so you can get that low interest. So why cleaning your credit is important. Having a credit card report, having a clean credit report and good credit score can also help increase your approval odds for credit cards, loans, and mortgages, as well as your ability to qualify for the best interest rates. Some people want to know if cleaning your credit really works. You can do it yourself too, but paying down credit card balances is a great way to improve your credit profile. But even then, you may not see the updates immediately. Many creditors only send information once a month, sometimes even less frequently than that. And remember that cleaning your credit takes time, but in the end, it's worth it. Conventional loan requirements. It is recommended you have a credit score of 620 or higher when applying for a conventional loan. If your score is below 620, lenders either won't be able to approve your loan or may be required to offer you a higher interest rate, which can result in higher monthly payments. We don't want no higher monthly payments.
Oh no, oh no.
Right, go ahead back there.
If you have a card and you want to pay it off and then cancel it, is that good or bad?
I'm gonna say on the installment, on the revolving, no, I would keep it till the term is up. Just keep your payments, when it reports, you gotta know the difference between the statement date and the due date. Always pay your credit card bill like 3 days before the statement date. That's when it reports to the credit bureau.
Okay, so if you got a credit card and I pay it off and I don't want it anymore, just keep it until it expires?
Yeah, I would still use it. Me personally, I would still use the credit card and pay it every month.
Use it or just pay it?
Use it and pay it. Yes, sir. I would use the credit card every month. And like I said, before the statement date, I pay the balance down to like under 10%.
That's the key.
So just use it and spend it on something small, just keep it
Yeah,
going.
they want to see that you're using it, you know, and so when it reports, those data points are being recorded.
Okay.
You know what I mean? You want to keep that relationship going, pay your bills on time every month. You had a question?
No, I was just really gonna ask, like, so keeping it at 0 is like probably not. You should maybe,
Yeah.
even if it's $20.
Buy
or
something with it, yeah. And keep the balance, like I say, under 10% when it reports.
We kind of changed the game, and you said we're gonna wait for questions, but.
Oh, thanks, huh?
But we should.
Thank you, huh? Let's go ahead and let him
But it's
continue.
hard not to
Ask
shoot
right on the spot.
on the spot.
I know, that's good. Write your
Don't
questions
forget
down on the
your
notepad in the folder. Everybody has a folder. If you could, write your questions down in that, and we're gonna have panel-style questions at the end.
Oh, okay, sorry.
No, you're fine.
Okay, so what credit is checked to buy a house? Does anybody know? Well, I'm sorry, I asked another question, but does anybody know what credit they use to check when you go get a mortgage?
Is it all 3 of them?
It's the
Yup.
FICO.
Good answer.
One of the most common scores used by mortgage lenders to determine credit worthiness is the FICO score, credited by Fair Isaac Corporation, FICO. Scores help lenders calculate the interest rates and fees you'll pay to get your mortgage. So in conclusion, having good credit is essential for achieving most of the things that are important in life. Whether you want a car loan, rent an apartment, having good credit can make all the difference. In addition, if you are hoping to buy a home, taking measures to improve your credit score could open up opportunities that weren't possible before. Good credit is also the key to getting approved for new credit cards with multiple benefits, lower interest rates. Lastly, there are many options available to help both boost your score and work on minimizing its impact if it's not as high as you would like it to be. Everyone needs good credit because it can literally open countless doors for them. So this is a bonus I'm gonna give away. The ebook, I'm actually gonna, everybody will get the book, but these are some credit builder accounts that can help build your scores, all 3 of your TransUnion, Equifax, and Experian. We got Self-Lender, Credit Strong, Kickoff, Gettington, Huntington Chase, Vital Card. These are different credit builder accounts that you guys can, they're like installments, and you can pay on them monthly, and they report to all 3 credit bureaus. And you can actually report your rent too. If anybody is renting, you can use these ones down here, rentreporters.com, Rental Karma, Rent Track. They report to all 3 credit bureaus. So this is good information to help you build your credit score up. So when you do go to get that home loan, you'll be in good position. But that's my time. Any questions?
All right. Thanks, man.
Go ahead, we got a question in the back.
We're gonna save those for the end. We're
Okay.
gonna save them for the end.
All right.
We're gonna save them for the end. Thank you so much, Sad.
I appreciate the
You
opportunity.
did an amazing job. When you have multiple people asking questions when they know it's supposed to be at the end, that's how you know you just did a great presentation. So I want to say thank you again to my good brother Cedric Jackson, and tell him where you came from today.
Cleveland. Cleveland, bro, out from Cleveland. I'm from Monroe.
Yeah. So
Strong level
big
three.
thank you. A big thank you. You can scroll down. Right. Yeah, I'm good. Right there. Big thank you to Cedric, and tell them a little bit about your company really quick before we end.
Okay, so what I do is credit repair. My company's name is Up the Score Enterprise. We work with people who need credit building or credit repair. If you have a business, we do business credit building as well, and LLC formation. If you want to start a business, I can help you start that up. So, thank you again. I appreciate it.
All right, everybody. Once again, thank you so much for coming out to Home Ownership 101. if you are just arriving, there is a folder that should be in front of your seat. And the folder has everything that you need for today. So you can take notes in that. So please make sure that you're taking notes throughout the presentations, because I know I personally wanted to stop, said a couple times and ask some questions, but I have to wait until the end. So panel style questions at the end. There's people online that are asking questions as well. So write those down, and we're going to make some time. I'm willing to hang a little bit after to answer questions as well. So everybody's questions are going to get answered. But yeah, our next presenter is coming out from Monroe, Michigan, previous resident of California, Ontario, California, Rancho Cucamonga, moved back to Monroe, Michigan, and it's me, Dorian Gray. Where did that go? So I'm going to be the next speaker. I'm really excited to talk in front of my community. This is a dream, literally a dream that I had coming to fruition. My company's called Dream Team Home Studios, and now I see exactly why the Lord gave me that name, because dreams can come true. Amen. And when you have a dream, don't take that lightly. Some people think that's some little kid stuff. But imagination, that's one of the best powers, superpowers that we all have. So the kids are just blessed to have a little more than us. We want to keep it, hold on to that imagination, because I believe that our Creator creates something out of nothing. So this was all just us all coming together today was a dream that was given to me, what I believe, by my Creator. And then also things happen in divine ways. So when I was in California, I happened to meet up and bump into Nipsey Hussle. And Nipsey Hussle, if you don't know who that is, he's a recording artist, but he also grew up in Crenshaw and Slauson. This is a gang area, heavy gang area out in LA, Los Angeles. And this area, near Los Angeles, this area had heavy gang activity, but coming out of that community, he grew up inspired by his father, who bought a lot of land, who had businesses, and who made something out of nothing. So he started his business and literally bought, like we see a corner store over there around the corner, Migiano's, we all know it as Town Square Foods. He bought something similar to that, except it had a hair salon in it, a barber shop, a clothing store, even like we got about 14 around here, dispensary. He had everything that you need in one plaza. He bought all of that. Instead of doing what a lot of people think entertainers do, is spend money on fancy cars, chains, and things of that sort, he wanted to create generational wealth. And that's what I believe we're all here for today. So I'm going to teach about how to buy back the block, how to buy a home and own a home rather than rent. Now, Nipsey, he was telling people, yeah, you see this chain on my neck, the reason you don't see me buying a bunch of these is because my money is invested back into my community. So he created foundations where teachers would meet up in the communities just like this and come out and volunteer their time, or they'd be paid to teach the kids in the community how to become the next photographers, videographers, engineers, how to do what would be a big one right now, artificial intelligence. You know, we need to teach our community and be intentional and be personally involved with our kids' education. So that's what this is all about today. And the marathon continues. So when I met Nipsey Hussle, he told me, if you came all the way out to California and bumped into me and we're talking today, I believe you're going to make it. I know you're going to make it. So push it as hard as you can, is what he told me. So that's what I'm here to do today. He wanted people to buy back the block. Well, my father's all about that as well. He's into real estate. He's a landlord, meaning he can help out his community. When rent prices are going through the roof, he's able to keep rent the same and help people get into homes. Give them a place when they're on the street to stay. Give them work, you know? So that's what I want us all to be able to do for our families, to buy a home of our own, to put our families in it, to rent out homes to them, which is income for you. And I could talk about this all day, but I need to get into my presentation, so let's get started. So that's the backdrop. Like my pastor says, that's the backdrop before we get to the drop of the text. So I'm going to get right to the text now. So Said almost stepped on my toes. Y'all saw that a little bit. He started giving mortgage programs. It's all good. I love you, brother. You set me up perfect. So what we need to ask ourselves after this event is, okay, we know how to check our credit score now. He gave you where to check it. So you should be saying, okay, my credit score is this now. So if you know where your credit score is, ask yourself, what mortgage program do I qualify? Do I qualify to buy a home today? So what mortgage lenders or mortgage bankers like myself, I work for Rocket Mortgage, and just keep this in mind as well. Everything that I'm stating today is from teaching, from learning. I have my license, of course, as a loan officer, but a lot of the programs that I'm going to speak about today are what we offer at Rocket Mortgage. So what I'm saying, please do your own research. I'm going to give you programs and tips that I know, but there's so many programs out there. So please do your own research, because there's even more out there than what I'm going to teach you today. So do you have a qualifying credit score above 580? If you do, if you can answer yes to that question, you may be ready to buy a home. You may be ready to buy a home. That's big. That's big. Because if you're renting right now, let me be honest and frank with you. You're paying somebody else's mortgage. You're paying off somebody else's mortgage. And I'm not saying there's anything wrong with that, but just know you're helping somebody else accomplish their dream of creating income. You know, there's nothing wrong with that. But if you want to own to where you can, after you're done buying, paying that rent every month, instead you're paying your own mortgage and building equity. So that's what I want everybody to be empowered to do today. But if you're above 580, you may be ready to buy a home. To get approved for a mortgage, you not only need a qualifying credit score, but you also need to have a qualifying debt-to-income ratio. Now, this is very important. A debt-to-income ratio is how much debt, how much monthly revolving debt do you have going out versus how much income, monthly income, do you have coming in. We all in this room, everybody online, need to be thinking about that every day of our lives. If not every day, at least every week. What is my debt-to-income ratio? At least every month, what is my debt-to-income ratio? Because if you're spending money out and money's not coming in, the church, this church has been here 101 years. If we keep sending money out, but no money's coming in, we can't even keep the lights on. So that's with any business. That should be the same with your family and your household. Be intentional about that. So that's your debt-to-income ratio. With an FHA mortgage is traditionally a program that is offered to first-time home buyers, but it's not only for first-time home buyers. It's a great program. It's a government-backed program. And the FHA is a program that allows you to get into a home with a minimum down payment of 3.5% of the purchase price of the home that you're looking to buy. 3.5%. The home's $200,000, 3.5% down. If the home's $400,000, 3.5% down. If the home's $50,000, 3.5% down. So keep that in mind. With the FHA, if you have a 580 or above credit score, I would highly recommend that you push to boost your score above 620. If you're above 620, like said, you're not going to pay as much interest in most cases. But what's important is a mortgage banker like myself, we'll be able to print your pre-approval that same day. If you have a qualifying credit score, if you have the funds, and if your debt-to-income ratio is in line. If you're below 620, we're going to ask for more documentation, jump through hoops. Nobody wants to do that. We all are very busy. So that would be my recommendation. Now, when it comes to the FHA, another reason why you want to be above 620 is because under 620, your debt-to-income ratio is going to need to be below 45%. That means, think about 50% of your income. If 50% of what you have going out is spent on your monthly mortgage, that's you don't have much left over. So think about it that way. But you can only have 45% on your debt-to-income ratio if you're under 620. Now, if you're over 620 with the FHA, you can go as high as 57%. That's a lot bigger. That's almost 60%. So think about that. You have more room for debt. It's easier to get qualified, and that means you could potentially get qualified for a bigger home. More rooms on your home, a bigger backyard, But you're not, if your debt-to-income ratio is down to 45%, it's going to be tougher to get qualified. So keep that in mind. We want to be above 620, and we want to reduce the interest rate. Now, the best tip with any mortgage program, boost your credit score as high as possible. Push to get above 700. Push to get above 740. Usually right at 740 and above, that's where you're going to get the biggest discounts off of your interest rate. So keep that in mind. So with the FHA, another thing to keep in mind is the FHA does have an upfront mortgage insurance premium. that's rolled on top into your loan amount. So you pay that 3.5% down, but then you have that upfront mortgage insurance premium. What is that? The upfront mortgage insurance premium is private mortgage insurance that basically the lender is getting insurance on you because you're an FHA borrower, which the FHA is a government-backed program for those that may be a little more risky, looked at as a little more risky. So you're paying additional interest just because you're looked at as a little more risky. So yeah, it's good because you can get a low down payment, but there's added interest for going FHA. I'm going to teach you about a program in a second, conventional, Said touched on it, that you can pay less interest over the life of your loan. So that's why it always pays to boost that credit score up and listen to my boy Said. So I'm going to keep going for the sake of time. All right, so when it comes to the FHA, to finish up on that, this program allows you to buy a primary residence. So you're not going to be able to buy an investment property. Some of us here, this is the first time, you even looked into buying a home. So you're not looking into buying an investment property to rent it out to somebody. You're trying to buy a home for yourself. I want to stop renting and own. Well, if that's the case, you can buy that with an FHA mortgage, a primary residence. But if this is a second home or a vacation home or an investment property, you're going to need to go conventional. You're going to need to go conventional. The FHA is for primary residences. Hack, TikTok level hack. Write this down. Jim. With the FHA, you can buy a multifamily home. So you can buy a 1-unit home, a duplex, a triplex, a quad, a home literally that can fit 4 different families in it. You can buy that up to 4 units with the FHA. Up to 4 units. Now, the hack about this is, with the conventional mortgage, if you're buying a 4-unit property, you better have that money ready. You better have that money ready. It's a down payment. My director, Lucy's back here. Everybody right here, this is my director, Lucy. Keep waving to the people. Thank you. So my director, Lucy here, we've been working together for over 2 years. And she laughed because a lot of people call in because they watch the TikTok video and they say, I want to buy a duplex, a triplex, a quad. I want to buy it. I'm ready to go. Because they heard that you can pay 3.5% down and buy a duplex, live in one of the units, and rent it out to a family member and have them pay basically most of your mortgage, and you're just living for free. Or maybe you have two or three people living in the other rooms, and you're living in one of the rooms, you're living for free because the other 3 people are paying your mortgage payment. This is that gym. This is that moment where the diamond comes up on the screen. Write that down because you can put 3.5% down with the FHA and buy a multifamily property. If you got 3 incomes coming in from 3 other units, you might not need to show up at that job. I'm not trying to tell you not to go to work. I'm not telling you not to go to work. But if you do this 4 or 5 times over and you got 4 or 5, 6, 7, 8, 9, 10 incomes, sorry, Lou. No, I'm just kidding. But in all reality, this is something that we should all keep in mind because it's happening every day. The wealthy people in America, they're buying houses in multifamilies and, I bought a house, now I'm going to go buy another house and then rent my other house out. Now I got 2 homes. I'm going to go buy a 3rd home and rent 2 houses out. Or I'm going to buy 1 house and then sell it, make a profit, and then go buy another house. So these are opportunities that you have when you're building equity. But if you're renting, you have no skin in the game. Nobody's even telling you that this game's going on. You're watching the basketball game that's on. You know what I mean? You're watching the March Madness championship that's going on right now. But you don't realize there's another game going on behind the scenes that's about that money. Let's get in the game, y'all. Let's get in the game. Go tell this to your cousin, your little cousin, your nephew, your niece, because we got to get in the game. We're behind. Let me keep going, boy, because we will be here for a minute. VA mortgage. Now, VA mortgages, do I have any veterans in the house? All right now. Sister Parker in the back. Brother Parker. Anybody else a veteran? Let's give a round of applause for our veterans in the building. Yes, thank you so much for your service. I do not take that lightly at all. My uncle was a vet as well. And with the VA, this is a program for our veterans, so we want to make sure that veterans have an opportunity to get into a home. You shouldn't have to be paying off somebody else's mortgage every day if you're a veteran and you served in the war. So what you do have the opportunity to have is a mortgage program that's a little better than everybody else's program. I'm sorry. I'm just going to say it. It's a little better than all the other programs. It usually has a lower interest rate. It usually has, well, that's the big part. It doesn't have mortgage insurance, which is huge as well. And one thing that I skimmed over a little bit with the FHA, you have that upfront mortgage insurance premium. The number that you can write down if you're on some high-level stuff right now today, 1.75% of the purchase price. That's rolled on top of your loan amount, and that's just interest you're paying over the 30 years. But on top of that, every month you have mortgage insurance. You're paying mortgage insurance every month, so what does that mean? With the FHA, your monthly payment's higher because you're paying extra insurance for being a riskier buyer. But with the VA, because you served in the war, you went through boot camp, you went through all that, you don't have mortgage insurance, so you have a lower monthly payment, so that's beautiful. You don't have an upfront mortgage insurance premium, which is beautiful. Now, with the VA, to get into the VA program, you're going to need a 580 or above credit score. But once again, I'm going to tell you this, with every mortgage program, it's best to have the highest credit score possible. Because with the VA, if you're under 640, Jeff, I know you're on the camera and everything, but I need you to pay attention to this too, because you got a family, you got to teach this stuff too. Jeff, he bought a home from me already, so I want to give a round of applause to Jeff, the cameraman today, one of the cameramen today. And basically, this is important because if you're under 640 with your credit score, you're going to end up having to put a down payment down. But one of the best parts about this VA mortgage program is you can put 0% down. Sister Parker, that's nice, isn't it? 0% down. Everybody else is thinking, they're calculating right now, grabbing their calculator. I want to buy a $250,000 home. That's 3.5%. I got to prepare that. With the VA, 0% down. So no down payment. That's amazing. Now, if you're under 640 though, if your credit score is under 640, this is why it's important to listen to SAID once again, you're going to end up having to put money down. You're most likely going to have to put 5% down even, potentially, for this loan to work. Now, also your debt to income ratio, if you're under 640, is going to be capped at around 45%. But a cool thing about the VA program is, with the VA, debt to income ratio is not as much of an issue. You can have a higher than 57% like FHA, you can go higher than that, and sometimes that loan is still going to work without an issue. So a lot of flexibility with the debt to income ratio. If you're above 640 in the VA, high debt to income ratios are okay. We want to see you get into a home. Still keep your debt down now, because I mean, who wants a bunch of debt and a mortgage payment? But you can get into a home with the higher debt to income ratio with the VA. But if you're under 640, once again, you have to stay under 45%. Now, these are for properties anywhere from 1 to 4 units. Luke, fact check me on that. Is that correct? 1 to 4 units. I had to check myself for a second. All right, so with the VA, though, you can't buy an investment property. Can't buy an investment property. So that's going to be what our next topic is, which is conventional mortgages. Now, with the VA, beautiful program. One thing that I didn't put on this paper here, though, there is a funding fee. There's a funding fee that's rolled on top of the loan amount, but that is so veterans can continue to get this great, amazing mortgage program with 0% down. So that funding fee is rolled on top of your loan amount. You're not having to pay it at closing, but it does allow veterans across the United States to continue to get this program. So moving right along to what we've been building up to and been talking about still the whole time, conventional mortgages. So with the conventional mortgage program, with this program, you're going to need a 620 or above credit score. 620 or above. But ideally, I'm going to say it again, you're going to want to have the highest credit score possible. Because 680 or above is usually where we see these get approved with the minimum down payment. 680 or above. Now, the minimum down payment on a conventional mortgage is going to be 3%. 3%. And that's for first-time home buyers. If you're not a first-time home buyer, you're most likely looking at paying 5% down on a conventional mortgage. Now, you want to be at 680 or above with conventional, And the debt to income ratio that you need to stay under with the conventional mortgage is gonna be 47%. 47%. So if you're listening and taking notes, FHA, you can go what? A little bit higher on the debt. First-time home buyers usually have FHA, so you can go a little higher on the debt. With the conventional, these, usually this is looked at by banks and by lenders as a less risky buyer. Less risky. So if you're at 680 or above, this also allows you the opportunity with the conventional mortgage to buy an investment property, a second home, a vacation home, or a primary residence. So all of these can be bought with the conventional mortgage. But the cool part is with the conventional mortgage, yes, you can buy the multifamily home, the quad, the duplex, and start your business being a real estate investor. Because some people here that you may own a home, and now you want to get into real estate investing, buying a second home, a third home, a fourth home, a fifth home. Well, with that, you can utilize the conventional mortgage to buy those investment properties. One thing though, if you're buying this is that gym again that we were talking about. If you're looking to buy a 2-family, 3-family, 4-family home on a conventional mortgage, you're going to have to put more down. So you're looking usually at 15% or higher to buy one of those properties, like a duplex, triplex, or quad. With the quad, it's even higher. You're looking at 25% or above. So just keep that in mind. You're going to have to fork out a higher down payment because if I'm being straightforward with you, lenders like myself, banks, we know you're buying properties to invest in them and create your own income. So they make it a little tougher. You have to put more money down. I want to make my money off of it. You're going to keep buying houses and making money and building your business. The lender is going to charge more down. So that's why that gym that we said earlier, I'm going to repeat that again. With the FHA, you can buy a 4-family home and put 3.5% down as a first-time home buyer and live in one of the units and rent out the other 3. With conventional, get ready to fork out 25% down on a 4-family. All right. So this program, I cannot leave without saying this. This is I would say, the highest favored program when you're going to make an offer on a home. So this is for people that may be looking, you're at the stage where you're out looking for a home and you want to get your offer accepted. Well, your realtor may ask you a question. Can you get approved on conventional? You might have an FHA pre-approval that you hand to a realtor. Now, I'm going to take a second to recap this because this is important and I kind of skipped past it, but everybody needs to understand this. When you're going to buy a home, I'm teaching you right now how to get pre-qualified to buy a home for your financing. If you don't have the money to go buy a $300,000 home cash, $200,000, $100,000 home cash, you need to get pre-qualified for financing from a bank, from a lender, so you can get that money. Now, when you go and get your pre-qualification letter from your bank because you're qualified, your credit score is high enough, you have the money in the bank for your down payment. When you go and get pre-qualified and you pass that pre-qualification letter to your realtor, it's going to be most favorable to have a conventional approval in most cases. The reason being, a conventional appraisal, when you go to have the home appraised and you're preparing to close on that home, the appraisal is less involved on a conventional mortgage. Sometimes it can be a drive-up appraisal where the appraiser just drives up, looks at comparable homes in the area, the size of the home, and says, this home's good to go, there's no major issues with the roof, I've overlooked around the property, we're good to go, the value is this of the home. But with an FHA mortgage, you're going to be looking at a much more involved appraisal. So what that means is the appraiser may come in, they're going to come into your house, they're going to check if there's electrical concerns, they're going to make sure that there's heat, a way to heat every room. They're going to make sure it's safe for that first-time home buyer, as they should. You know, because the FHA is a government-backed program for first-time home buyers. They want to make sure that the home that's being sold is safe for that person to move into. So the reason why a conventional offer, a conventional pre-approval or verified approval is the highest favored approval from sellers is because if a seller wants to sell their home and move out really quick and not have to worry about an appraiser coming around poking in every room of their house, hey, what's going on with this chip peeling paint? What's going on with this railing? Why isn't this railing fixed when I walk up the steps? They're going to check on all of that with the FHA, but with conventional, you can pretty much get ready to move on out, get your stuff, pack it up, and move out. If there's no major hazards, that appraisal should pass. So that's why you're going to want a conventional approval if you can. Boost your credit score above 680, get your debt to income ratio under 47%, get a conventional verified approval. Now, with a conventional mortgage, another major key to write down, if you put 20% down on a conventional mortgage, you can wipe out your PMI. You can wipe out your mortgage insurance. So if you were taking notes or listening, with the FHA mortgage, there's mortgage insurance that's added because you're looked at as a borrower that has more risk. There's mortgage insurance. But with the conventional mortgage, there's still mortgage insurance until you reach 80% loan to value. What that means is until you've reached the point where you've paid the principal balance down to 80%. Once you're below 80%, your lender, call them up, or they should automatically do it. They will remove your mortgage insurance and your monthly payment is going to drop because you're not paying for that insurance each month. So if you have 20% down prepared, it may be a wise decision to put 20% down, go conventional, remove your mortgage insurance, and that's the way to get that low payment. So keep that in mind with the conventional mortgage. That's the most favorable. That's what we're all going to work together and do. We're going to boost our scores up to 700 plus, 680 plus, get our debt to income ratio down under 47%. That way, whenever we go buy a home, we don't have to worry about mortgage insurance if we have that 20% saved up. Or even if you don't have 20% saved up and you put 3% down as a first-time home buyer on conventional, just pay your mortgage down over time. Once you reach that 80% loan to value, it drops off. So this right here is a quote from my good brother. If you don't mind standing up, somebody get him on camera for me real quick. The guy in the really clean pinstripe suit, right there, my friend DeAndre. Can you get him? You got him on the camera, on live? All right, for my live viewers and for everybody in person, this is my good friend and teammate DeAndre, Kemp Jordan, and this quote was from him. He said, "Prepare for a mortgage payment that is just under 1% of the price of the home." So DeAndre, thank you, my brother, for coming out. I appreciate you. Yep. So I banked right next to my brother every single day at Rocket Mortgage, and he's somebody that I take a lot of information from. He had a financial advising background before he even came to Rocket to be a lender, and that was something that I took that was very knowledgeable. It's really good information you can use. So please write that down and use it.
Let's hear it again.
You can say it out of your own mouth, DeAndre.
So when you're looking at a mortgage, right, or more specifically a home that you want to purchase, really plan for 1% of the purchase price to be your mortgage payment. It's going to be the biggest thing there, and it's going to be, give or take $300 in either direction. But that's just a great way to plan for what your payment's going to be and what you can afford personally.
Good. Thank you, brother. Thank you. So that's a key right there. That's a major key. When you're looking at houses, prepare for that monthly payment because it makes no sense to buy a house and be house poor. You can't afford the monthly payment, or you can afford the monthly payment, but you can't afford any of your other bills or to go out and even eat. Grocery, get some groceries so you can eat. So something that's very important. Buy a house when you're ready. Don't rush it just because it's a trend or something. Because a lot of people lost their homes in 2008 or after 2008. We don't want that to happen to us. So I'm not going to spend a lot of time in this section because I spent more time in the first section, and I think that's more important. But this is interest rates. One thing to keep in mind with interest rates is, and I'm going to have this information on my website on www.dreamteamhomestudios.com when you can dig into it, but this is a little more high level that I don't want to spend a lot of time on this because I want everybody to hear everybody's presentation. But basically with interest rates, they go up and down depending on the 10-year treasury, the U.S. 10-year treasury rate, which fluctuates due to three main things: the sentiment of the economy, interest rates, and inflation. All right? So the part that I want to focus on more so with interest rates is interest rates are something that you have the power to choose. You're the buyer. You can shop around for a mortgage. And when you are shopping for a mortgage, you need to focus on your goals. I want to have the lowest monthly payment. I want to get into a home and have the lowest down payment, the lowest funds to close. If that's your goal, come into that conversation knowing, okay, I want a low monthly payment, or okay, I want my lowest funds to close. Now, what a lender's doing when they're choosing your rate is there's discount points. Discount points are used to lower your interest rate. Your interest rate directly affects your monthly payment. So that's why it's so important to listen to said and have a good credit score, because the higher your credit score is, you're going to get a discount off of your interest rate. So you can go to your lender, to myself, when you're ready to buy a home and say, I would like to pay for points, but only 1 point. Now, 1 point is equal to 1% of the loan amount. So keep that in mind. 1 discount point is equal to 1% of the loan that you as the buyer or borrower have to pay additional at closing. So you have your 3.5%, your 3%, whatever amount that you're paying down, but then on top of that, you're going to have closing costs to pay for your appraisal, the title services, the escrow account to set up your taxes and insurance to come out monthly. There's down payment, closing costs, but then also a part of the origination or setting up your loan is paying for discount points. So after this conference workshop, what you're going to be able to do is confidently go to your banker, me. Like that one, Luke? You like that one, Luke? No, you're going to come to your banker, me, and say, or whoever you choose as your banker, you're going to be able to say to them, I don't want to pay for points. My goal is to have a monthly payment at this number. My goal is to have a funds to close at this number. And then you can work together with myself and we can figure out, okay, you're going to be paying 1 point if you want to get that monthly payment. Okay, if you pay no points, your payment is going to be this high. So you have the ability to have that conversation. Your skin's in the game now, and now you're negotiating. This gives you that opportunity to negotiate. 1 discount point is equal to 1% of the loan amount you pay extra at closing. So knowing this information will help you to decide an interest rate. So I'm going to move right along to assets. So assets, this might be one of the most important parts. You may say, Dorian, I have a 580. Come on, 580, I got that. I've been working hard. I have a 580. As a matter of fact, I have a 620. Print my pre-approval right away, I have a 620. But if we get on a phone call Monday after this workshop and you got a 680, you have under 47% on your debt to income, you make enough money, you got a consistent job, but you don't got any money? What are we talking about? Are you a veteran? Were you with Sister Parker and Deacon Parker in the military? If not, if you got a 0%, if you have 0% ready in the bank, if your bank account says 0, you're not ready to buy a home. But there's some ways that I can help out with that. There's some ways and tips I can teach you. But at the end of the day, you're going to need to have assets. Now, one thing about the assets, you might say, Dorian, I have the money, it's just not in the bank. Got it in the shoebox, got it buried, got it in a safe. You have to have the money, the funds, in a traceable and accessible format. A traceable and accessible form. Hey, Granddad. So that means you can't have it in the shoebox, not in the house, in the closet. You have to have that money in the bank. But it doesn't have to be in a bank. You can have it, or just like a traditional checking account or savings account. It can be in a 401k, as long as it's a vested balance you can liquidate. It can be in an IRA. It can be in a stock account, any type of brokerage account. If you got an Acorns account like myself, there's some different apps that help you save money. These are different traceable, accessible forms. We just need to see 60 days worth of those asset statements. 60 days or 2 months. So your bank's going to want to see their last 2 months of bank statements. So as the buyer, you're responsible for your down payment and closing costs. And I want to get to the part that I really feel like everybody needs to get their pen out on this one. Gift funds. Let's talk about gift funds. So you might be saying, Dorian, 3.5% of that $1 million home that I want to buy is way more money than I have in my bank. Well, I might say to you, stop looking at the $1 million home, start a little smaller. Build up to the $1 million home. You're going to get there. I believe in you, for real. No laugh. But you want to start off with the home that's in a price range where you can afford that monthly payment. And if you have the funds, let's say you're almost at that 3.5% down. You're almost there, but you don't have enough saved up. It's time to call your cousin. It's time to call your parent. It's time to call your uncle. Remember that one uncle that said, if you go to school and you get straight A's, I'm going to give you $20 for every A. It's time to collect. You've been getting A's for a long time. It's been 4 or 5 years. Sir, it's been 6 years I've been getting A's. You owe me this much money for that. You can use funds from family. You can use gift funds from family. Now, the next place your mind might go is, what's family? What's considered family? Because, shoot, what we say on my team is, let me hold some. Let me hold some. So what that means is, if you have somebody that you know that's not technically your family, there's going to be some distinctions of what family is. So gift funds can come from family, but what's also considered a family member is a spouse. Y'all aren't married yet, but you're going to get there, you know what I mean? Like, it's not legal on paper, but we've been living together for 10 years. Well, you probably, I'm not preaching up here, but you probably should come to Second Missionary Baptist Church, and we'll teach about that a little later. But in all reality, that counts. What do they say? I think it's 10 years is actually like recognized as a marriage. 7 years, 8?
7, 8.
8 years, you're recognized as married. So we're going to accept that money. We'll accept it. You know, if your spouse has money, if you're in a domestic partnership, they can gift you funds. If it's your fiance, you're preparing to get married, hey, we'll accept those funds. Go propose to that rich girl, to that rich guy. Just kidding. Just kidding. But we'll accept those funds. Now, it also can be future in-laws. So your girlfriend's rich folks, you know what I'm saying? Boyfriend's rich. We'll accept those funds. Those are gifted funds. Future in-laws, parents, step-parents, foster parents, grandparents, hey granddad, grandchild, aunt, uncle, niece, nephew. All of these people can gift you funds. DZ, don't try it. I don't got it. I don't got it yet. No, just kidding. But former relatives, that's crazy. I can't believe that's on there. Former relatives, godparents. Godparents. This is huge. So let's say you have $10,000 saved up, you're $5,000 short. It's time to call everybody I just listed on that list. You can use multiple gift letters. All right? And then lastly, I wanted to talk down payment assistance and grants, and I'm all done for today. So there are programs, and I'm speaking from a perspective of Rocket Mortgage. So I can tell you what programs we have at Rocket and some other programs I've researched about on the state and local level. But there's so many programs out there. Do your research. But with us at Rocket, we have a lot of programs, such as programs that will get you $1,250 to $2,500 off at closing. Once again, you're going to want your credit score above 680 in most cases for these programs. But we have programs right now, such as the Borrow Smart, that offers $1,250 to $2,500 off at closing. And then an additional $7,000 depending on certain areas. One area is Detroit, actually, as well. Certain areas of Detroit that offer an additional $7,500 off on top of that $1,250 to $2,500. So we have a lot of programs that offer up to $10,000 off at closing. So if you're short on funds to close, but you have a stable source of income, and that's the part I'm going to end on today as well. If you have a stable source of income, you've been working for your job for 2 years at least, you may be ready to buy a home. If you're under 47% or under 57% debt to income, you may be ready to buy a home. If you have 3.5% of that purchase price or 3% of that purchase price and a qualifying credit score, you may be ready to buy a home. So what I'm saying to everybody out there virtually and here in person, if your excuse was I'm renting because I've never saved enough money to buy a home, I don't make enough to buy a home. If you can rent at $1,500 a month, $500 a month, $700 a month, $1,000 a month, why couldn't you pay a mortgage at $500 a month, $1,600 a month, $700 a month, $1,000 a month? You can do it. It starts with believing in yourself. All right? And if you're short on the funds to close, we all learned it today. What do?
That's your family.
Ask your uncle, ask your family. Ask one of those family members that were on the list. My name's Dorian Mandela Gray. Thank you all for coming out. God bless you. And if you're ready to get to the group, please reach out to me. I have my cards everywhere today. And also there's an exit survey, physical survey, for after everybody's done speaking today. Please write down the names of 3 people that you think are ready to take that next step with you. Because do what I'm doing. When you buy a home, go out and share this information with your family, with your friends. Let's build generational wealth as a family. God bless you, everybody. Thank you so much for your time.
We're about 5 minutes break this week.
Now, there is refreshments for everybody. You go ahead. While we're switching presenters, everybody, you can go. I'm not going to say 5 minutes, but there is refreshments in the kitchen area, so please feel free to grab some chips. Some subs. I see my mom got some Subway. She went out on it. So there's some subs in there, some chips. I believe some snacks in there, some water. Go ahead and grab some. I'm gonna grab some water myself. But thank you for your time. I know I can feel it coming. Oh, thank you. Next time, feel free to come up and interrupt too, by the way, and say you have white stuff on your lip. But that's just, needing to stay hydrated. You feel me?
Hey, I didn't even peep.
Thank you, Bree.
It's a stylist to me.
No, that's why I was making sure you were coming. Bree. Yep, it's on Dream. Yep, good, thank you.
Let's go to sleep.
It will, yes. Remember, because before Seth spoke, it was kind of...
We don't want to see this.
Okay, they're not seeing it online at least, so you don't have to worry about that online at least. If you want to leave my picture up there, you can, or something from the presentation. Like I got the flyer up there, you can do that. Dang, Florence, you probably checked the agenda better than I did. Who's next? You?
No, I'm not next.
No, I think it's Christy actually. Christy's
Yeah,
next.
I just didn't want to have.
Okay.
I can't find you now.
I feel so bad when I came in. No, like you are. So good to see you. And I got
That's what that is. I just had that.
when I saw your face on this, I was like, what you got going on here? My beard.
Oh, maybe a little bit. Not much. Not much.
I know. I'm not ever going to shop, but I can't do that. Hey, brother. Jeff, can you take this off? I'm about to just introduce Pastor.
Okay.
Where Mookie at? Is her camera still straight? We need to go to her camera. Switch to her camera.
Karen, what happened to the Sweet 16?
I got so caught up in so much other stuff, I totally forgot.
I got,
Totally forgot.
they in there, this just my hair.
Yeah, team meeting time. All right, so press this fade button to take off the screen.
Hard to deal with.
Yes. All right. So while everybody's grabbing food, I just wanted to take a second. Mookie, can you see me on there? I just wanted to take a second to introduce the most amazing pastor on this side of heaven, Terrence L. Johnson, who came out to support. And I wanted to thank him for allowing us to use the fellowship hall today.
Absolutely.
So many places would charge you crazy amounts of money to have a workshop like this, and Pastor opened up the doors for free and wants us to continue to have this. So Pastor Terrence Johnson, everybody, do you want to say anything to the people? No? Okay. Well, I'm going to say it for him. We are having church tomorrow at 10 a.m. here at St. Missionary Baptist Church. He taught me well. So come on out. While everybody is coming back from the restroom or grabbing some food, we're going to have our next presenter come up just so we can stay on track with time, because I know I'm long-winded, so I probably took up for sure more than 25. So I want to keep us on track somewhat. All right, so our next presenter that I want to announce is somebody that I partner with, a family friend, someone I look at as family, and she is a local realtor. I'll let her explain more, but she actually helped find my home. She helped find my home and a lot of the homes that, some of the homes that my family has, and I can't thank her enough for all she's done, and I know she's passionate about doing the same for you, and that's Christy McCleary. Hold up, Christy.
Thank you, Dorian. I appreciate you having me here today, and I appreciate that he's brought you all together to talk about generational wealth. That's something I am very passionate about. I'll give you a little bit of my background as to why I'm passionate about generational wealth. I was married at a young age of 18 years old, and unfortunately, 11 years later and 4 kids later, I lost my husband due to a drunk driver's negligence. So it left me at 29 years old with a 10-year-old, a 7-year-old, a 2-year-old, and a 10-month-old. So I've had some struggles of my own. So at that time, we did, as a married couple, we did the right thing. We got the life insurance policy, thank God. So ideally, I shouldn't have had to work full-time while single parenting 4 kids. Unfortunately, he died in Thanksgiving morning 2007. My financial advisor took that life insurance policy, invested it for me into real estate. So he invested it into real estate investment trusts. So unfortunately, 2008, the market crashed, and there went the money. So it put me right back to trying to figure out how many jobs do I have to work to feed 4 kids, right? So, and at that time I lived in the country, so it was, I lived amongst a Amish community, ironically, so they were my biggest support system apart from my family. And thanks be to God, I have a wonderful family and a great deal of faith, and that's been my main support. So I'm passionate about it because I know even I pursued a bachelor's degree, just shy of a bachelor's degree in paralegal studies. I can't make the kind of money doing that I can in real estate. So not only can I help you buy or sell real estate, but for anybody in the room that would be interested in how to make a 6-figure income from a 40-hour class.
Wow.
I'm here to help you. So it's been a game changer for my family. You all might be familiar with my broker Corey Welch out of Monroe here. So I am part of eXp Realty. I've been with eXp for about 16 months now. My first 16 months with eXp, I hit my income goal, which was a 6-figure income. So that was first time in my life, I'm gonna be honest. That was a game changer, okay? I bought my first investment property. So how do we create generational wealth? There's many different ways. So Dorian talked about investment properties, duplexes, twinplexes, quadplexes, a way that you can purchase a property and still make income that will help support your family. My first investment property, I should say my most recent investment property, is actually something I'm going to use as an Airbnb up north. So how one property that I purchased for about $120,000, if I market it appropriately, should create about $60,000 a year. So there's so many different ways to create generational wealth from real estate. And if you get with the right people, which they're all in this room, we can teach you the tools. Dorian can get you pre-approved. I can help you on your search. If you need credit repair, everybody is here to help you in a way that can benefit your family for generations to come. So my goal into getting into real estate is definitely generational wealth, not only from my income that I use to purchase real estate, but my long-term goal is that I would have investment properties that would create wealth for my kids, my grandkids, and so forth. So what's happening right now in the Monroe market? So I service about 4 different counties. I'm in Wayne County, Monroe County, Lenawee County, and Hillsdale County. So for instance, today I'm going to be in 3 of them. So, but here specifically in Monroe, you may have heard people are preparing for market crashes. You may have heard, things are horrible in real estate. I would encourage you not to listen to any of that because the opposite is true. So on properties that are priced appropriately, they're not overpriced, and they're turnkey ready, these properties are selling within hours or a couple days. Worst case scenario, if it's overpriced or it needs, significant amount of work, they may be on the market a month and a half. So for instance, February's market results, the average home was on the market 45 days. Well, in January and February, those are some of the toughest months in real estate because not everybody wants to get their snowshoes on, right? But I'll give you for instance, I listed a property in Lenawee County in Blissfield 2 weeks ago. It sold first day of showings. So if it's priced right, if it's affordable, these properties are going quickly. Also, just to give you a little bit of tidbit information, we don't have the same conditions today that we had in 2008 that created that market crash. Unemployment rates are high. We had a lot of building going on, which we don't have the building right now. We've had lumber shortages in the last couple of years. So the conditions that took place in 2008 aren't happening right now. What we're seeing in the market right now is shortages of homes. So as realtors are trying to get the market moving, we need more people to sell their homes because we have a handful of buyers that are ready to purchase that we can't find homes for. So for those houses that are on the market, it is a little competitive. So getting your credit score high, having some money put back is definitely a benefit. On a contractual deal, I can negotiate some things. If you don't have all the money that you need, depending on the property, we may be able to ask for money towards closing costs. So that is something that we can negotiate. So say you have
Write that down, y'all.
Yeah.
You don't have the money, ask the person selling the property for the money.
Yeah. So say you have the money for closing costs, you're an FHA buyer, you have your 3% down, but you have your down payment, but you don't have your closing costs. So I just accepted a contract for one of my sellers where we're giving $6,000 back to the buyer for closing costs. So it depends on the property, it
Can you
depends
say
on.
that again? I'm sorry.
Sure. So on a $400,000 purchase, the buyer is buying a big property and it's gonna need some work. So the buyer said, we'll give you $400,000, but we're gonna need $6,000 back to go towards closing costs, prepaid, down payment, whatever they wanna use it for. So for homes that are listed a little bit longer, you know, that don't maybe have 3 or 4 or 5 buyers putting offers in right now, those sellers are typically anticipating that the buyer is going to ask for some sort of money back at closing. So it just depends on the property. If you're up in Wayne County, I have a buyer right now in Wayne County, it's tough. You know, Trenton, Wyandotte, those properties are still getting 10, 12 offers on them. So in a situation like that, you're probably not gonna be able to negotiate seller concessions. Monroe County is a little less competitive on many properties. However, if they're updated, turnkey ready, those properties are also going quickly. So I'm here to help you guys like Dorian is. If you have questions, please feel free to ask me. I'm also offering a $100 gift card. If you guys fill out a post or index card in the back and put it in a bowl with your name, phone number, and email, somebody's going to win a $100 gift card. So please, when you go get food, remember to do that. And feel free to call me. Even if you're not ready to buy now, I can help advise you so you will be in a year or two. Thank you.
Oh, well, hold on. Okay, just a second.
All right. So once again, I want to thank everybody for coming out to Homeownership 101. Our next presenter is going to be someone that is a mentor of mine and somebody that I've looked up to for a long time, a good friend of my mother, Denise Gray, I want to give a big shout out to her for all of her help with the event. Yes. Thank you so much, Mom. Denise Gray, she helped out with the beautiful tablecloths that you see here, the subs that everybody's grubbing on. I'm surprised I got one. But the subs that everybody's grubbing on, so thank you so much, Mama. I know you don't want me to do this, but I gotta give you some love. But my mother introduced me to our next presenter, and she's a mentor of mine, somebody that I called on literally for this event for advice on how to make it happen, and just a great business professional, and just somebody that is a resource of mine that I felt wrong not sharing it with the community. So, Florence Buchanan, thank you so much.
Thank you, Dorian. Good afternoon, everyone. First of all, this has been a tremendous workshop. Let's give Dorian a hand for putting it on. Can you guys hear me okay? Okay. So let me just give you a little bit of bio about who I am. I spent about 10 years in corporate America working for a Fortune 500 company. And then I transitioned into telecommunications, privately held cable TV company based in Toledo, Ohio. Did that up until 2016, left corporate America and started my consulting business, Customer Experience 360. So I worked with local governments, local nonprofits on strategic planning and customer service and customer experience management. Okay. So let me just say up front is I am not a financial planner, but my presentation today is going to focus on the wide black wealth gap. how we got there, we all know it goes back to slavery, but it's not all doom and gloom. Some of these statistics are going to be very sobering, but we have to, as a culture, realize only we can change it. Only we can change it. You know. And having these forums like this is just tremendous. Look at the talent in the room. Dorian, Cedric, it's just amazing. One advice I will give the young people in the room is to, whatever I uncovered here in this presentation, start early. Personally, I don't think I started with my financial planning early enough. I put off buying a home because I thought, you know, I want to wait till I get married because I want to have a partner to choose this home. Well, that hasn't happened yet, but I've bought 3 houses.
Woo!
So,
Amen! Let's go!
and the first was, wait a minute, the first was investment property. Like, you know, I had a duplex, I lived on one side and rented the other. And then, and I know it may be challenging for single people, but you can do it. The ladies, you can do it. The guys, you can do it. You just got to have that confidence. And educate yourself, have mentors, and talk to people who have done it before. I didn't have anybody in my family, in my immediate family, who went to college. So did I make mistakes with finances? Absolutely. But when you are younger, please start earlier. That's my best advice. Okay, so we're going to talk about Black history. And some of these statistics may be painful, but we have to hear it. And we have to know, think about how we can change this as a culture. So we're going to start with, I'm going to move this over a little bit so I can see it. Start with this historic timeline. And really, this historic timeline really has occurrences that have solidified that significant wealth gap between white population and the Black population. So if you take a look, you see 1619 was the first year when slaves were brought from Africa. And then we have, about 200 years later, the United States banned the import of slaves to the United States. Another 55 years, the Emancipation Proclamation was signed by President Lincoln, freeing the slaves. And then we have the 40 acres and a mule, and about 2 years later in 1865. Now, we've all heard about 40 acres and a mule, right?
I ain't seen it.
Right. Well, you're gonna learn a little bit more about that. I didn't realize till I started researching, and my presentation is based upon the research that I have done, how significant that is. And then we have in that same year, 1865, President Lincoln was assassinated. And then we go on to same year, Juneteenth. We know what Juneteenth is. And then once again, we're back to 40 acres and a mule, same year was repealed. And then 1910 to 1970 was called the Great Migration, when you had the largest group of African Americans who were moving from the South to the Midwest and to the West Coast for various reasons that we'll talk about here in a second. Juneteenth. June 19th, 1865. Does anybody know what happened on that date?
Until the slaves, they was free.
You had the Union soldiers going to Galveston, Texas, because in 1863, 2.5 years prior, the Emancipation Proclamation was signed to end slavery. We know that date. We've been celebrating it for the last, I think I heard about that date maybe about 20 years ago, but in the last 5 to 10 years, it's really gotten some significance. What is this date? June 17, 2021. Federal government made it a holiday. So on that date, like the post office, closed. What is this date? June 19, 2022.
Federal government took the holiday away. No, I don't know.
Governor Whitmer made it a state holiday in the state of Michigan. Because even though it's a federal holiday, each state can do what they want with that day. So state employees too have that day off. So Juneteenth. Now we go to 40 acres and a mule. So this was actually a special order. General Sherman, a Union general, decided, kind of a reparation to help the freed slaves have home ownership, or at least land. So they seized 40,000 acres along the southeast coast of the United States, and was confiscated from the Confederacy, and left over army mules, 40 acres and a mule, right? So each family was not to have more than 40 acres. Lincoln died, though, assassinated, you know this, in the same year. And guess what? His predecessor, who was Andrew Jackson, was sympathetic to the Southern landowners, so he repealed it. Did anybody know? I did not know that, Trevor. Did you know that? Okay, I did not know that.
Yeah.
And what
Can
happened?
you repeat that?
Yes. So the special order was given to give 400,000 acres plus a mule. Divide that up. Okay, so that would have been 1,000 slave families, former slave families, freed, that would have had 40 acres and a mule. But when President Lincoln was assassinated, his predecessor, President Jackson, repealed it because he empathized with the Confederate landowners at the time.
So is it safe to say that that was like an act of terror to prevent the 40 acres and a mule from being carried out?
I wouldn't say,
Assassination?
well, I wouldn't say terror, but it was a systemic racism is what it was. The system was set up then. Okay, you know, they potentially gave it to the free slaves, and then they took it back.
Right.
Assassination ever was tied into that a little bit, maybe?
You know, what happened, I know a little bit of history about this.
Okay.
What happened was, Lincoln had another vice president at that time that he removed and put Andrew Jackson in his space. And that's what happened. Huh?
His own mistake,
It was Lincoln's fault for putting that new vice president in that
Okay.
space. So when he got assassinated, he became president of the United States.
Okay.
That was a mistake by Lincoln. But Lincoln knew that, though. Lincoln really wasn't a big emancipator as we think he was. If you look back, if you look back in history,
Okay.
yeah, he knew this guy was sympathetic to the Confederates. So when he got assassinated, this guy became that. That just changed everything.
It changed it. Yeah. That's what.
But Florence, that was the first known reparations to African Americans, and that plan, Special Order 15, was not just given by the government. It was actually negotiated by a bunch of black pastors from Georgia, one being Garrison, that negotiated that deal, that this is what we want. We want land. That's the most valuable thing in America right now. So it was negotiated by a group of black pastors, and when they negotiated that, that's probably the only and the first form of reparations given to African Americans, and then again, like you said, it was taken back.
Thank you.
Sorry, Florence, I started this. My bad.
Wait a minute. No, because you know what? We're sharing information
Yeah.
that I didn't know, and some others may in the room have known either. This is what it's all about, sharing knowledge and sharing information. So it's all good. It's all good. So now let's talk about the Great Migration from 1910 to 1970. 6 million black people moved from the South to the North to the Midwest to the West Coast. Black Americans. Why? To escape Jim Crow rules and to get economic advantages and educational opportunities. That was the goal, but we know that still has not happened. Okay, so actually that Great Migration is in two phases. The first was in 1910 to 1940. And the first, in the early 1900s, it was World War I. So a lot of able-bodied men went off to the war in Europe, right? Let's see. Other nationalities of people were banned from moving around the entire world, and then the black population was deemed as basically free labor. So as a result, migration into these major cities. New York, industrialization, Chicago, Detroit, Pittsburgh, steel, manufacturing, et cetera, et cetera. You know, I never really thought about why there is just a concentration in the urban areas. It's because of this great migration.
Wow.
People from the South were trying to escape to a better life and earn a better living. And then they end up running into, we know, racism, systemic, and
it's everywhere.
Everywhere. So then the next phase of it was 1940 to 1970. Once again, centered around a World War II. This time though, a lot of black Americans were making money and living more comfortably. And then on the West Coast, you had the defense system employing people with better jobs. So then the migration went from the Midwest and the North out to the West Coast. Oakland, Los Angeles, San Francisco, Portland, and Seattle. So what happened though? Everything is listed. Housing discrimination, redlining, we talked about that. Creating segregated neighborhoods. We all know that soldiers came back from the war and couldn't live where the other soldiers couldn't get those loans to buy those homes. So everything that I've talked about is the foundation for that disparity in black wealth that still exists today. Now, I don't want you to think this is all doom and gloom, because we can change this. It's going to take generations of meetings like this in your neighborhood, in your family, thinking differently. Thinking differently. Did somebody have to
I
hand?
did, but I forgot we have to wait.
Okay, that's okay. Oh, that's okay. So now we're going to talk about black land theft. You know, we talked about it with 40 acres and a mule. But look at these statistics. At the beginning of the 20th century, which would have been the early 1900s, African American, particularly farmers, owned 14 million acres of land. By the 21st century, 90% of the land had been stolen from them.
Wow.
It's pretty
You guys pause for a second on that. Wow.
That's my question. I'm sorry. That's my question. That's my question. How are we gonna stop them from taking it again? Like, you know what I'm saying? We gonna build this wealth. You know, how are we gonna stop them from doing it again, like the Black Watcher? You know what I'm saying? Like, once we build it and they see that we have it again, what's gonna stop us? How are we gonna stop them from taking it again?
This is just my thought on this. We have to get engaged in the process, particularly the political process.
Absolutely.
At the local level. Because you see it over and over. People start at these city councils and they go up to chain. They're in the state, they're in the governor seat, and so on and so on. You can look around the country, you can see it, it's clear as day. But if we don't get involved in the local elections, either we're running for these positions or we're supporting people who know support our causes. We can't stop this. And then we can't expect the government either to change what we know we need to change as a culture. That's just my opinion. Somebody else may have a different opinion.
No, you're right.
Yeah.
100% right.
You know.
That's genius.
Okay. So now, and this research that I did was actually effective 5/22 of last year. African Americans only owned, and this particular farmers, 1.1 million acres of farmland, and are part owners of another 1.07. Look at all of that wealth, generational wealth that has been lost. Goes back to 40 acres and a mule when we think about it. Okay, Mississippi, and I lived in Mississippi throughout my career for a year and a half.
I've been there before too.
Yeah, it was just interesting. That was years ago. I won't tell you how many years ago, but that was years ago. And from 1950 to 1964, 800,000 acres were stolen from black Americans. The value of that land today is $3.7 billion. 6.7. Land is valuable. Put a house on it, it's even more valuable.
Just Mississippi.
That's one of my questions too. Mortgage.
Now, I'm going to talk about how some of this theft has happened. Back in the day, we didn't have wills. Even today, name some famous people you know who passed away recently, died without a will.
Take off.
DMX.
Aretha Franklin, Prince, John Singleton, the director.
That's too many.
That's too many. And these people had money,
Prince had a whole.
they had wealth, they could afford to hire any attorney that they wanted to have their will. But why didn't they think about it?
Why didn't
No.
anybody tell them, you know?
No education, right? They didn't probably know.
I don't believe that with Prince though.
Right.
He
Yeah.
was very
Why couldn't somebody just tell them, like, hey, man, you gotta...
business work.
That's one way.
Thought they was gonna live to be 90.
Yep.
Not having a will is one reason. Tax sales,
That was part of the
okay,
private.
taxes come up, that even happens today. If you don't pay your taxes, it goes up to public auction,
Wow.
okay? And then the other reason is Torrance Act. This was actually came from Australia, I believe. that because there wasn't a lot of communication between families and wills weren't in place, that property could be sold, and maybe it was 5 people owned it in the family, but if it wasn't recorded, they just took the land. So see how over decades and centuries, Black Americans have been, their land has been taken. You know, our land has been taken. Just another reason there. And then this is an example, you may have heard about this recently, it's been in the news, Bruce's Beach. That
Yes.
the patriarchs had started that in that resort area in LA County, and eminent domain. You know what, you guys know what that is.
Mhm.
The government deems it's better for the public good, so just take their land. They did that, but,
Even if you have a will, they can do that, right?
I don't know that.
Oh.
Yeah, that I do not know. But recently, the family sold the property. They did acquire the land back, but they sold it back to the LA County for $20 million. Now, I shook my head too. I thought, I can't believe they did that.
That made me so mad.
But I researched it. I did research it, and what they said was, and it was a pretty large extended family, none of them lived in LA. So they didn't want to run the business, so they took the $20 million, and I assume they
Is
divided
that like
it.
a short sale though? That
It-
land was
it
worth
does,
way
I
more
know.
than that.
Yeah.
But you know, it's a family decision that they made how to distribute their wealth. That's how you gotta look at it. I thought the same thing. I thought, oh gee, why did they just take this? But it takes it's a commitment to run a business like that. So
Yeah.
that's just an example.
This
This
is
is
get it why they come try to take it again and give them less. You never know.
this is another example. Now this is Idlewild. Has anybody been there?
Upper Michigan? Is that Upper Michigan?
Northwest rural area. Now, I'd always heard about Idlewild, and at one time this was called the Black Eden, because before the Civil Rights Act of 1964, a lot of black entertainers couldn't go anywhere. They couldn't go to Las Vegas to entertain, they couldn't go to larger cities. So actually 2 white Jewish investors started this community on the lake, Idlewild, Michigan, and it was, as I mentioned here, it's the only 3rd largest resort in America catering to black visitors. Now, once the '64 Act came about, then entertainers were free to go to wherever, Las Vegas, New York, Chicago. So it's kind of gone downhill. There has been opportunities to get it rebuilt, but I was actually there. I just took these photos. That was in 2019 on a bike ride I participated in. And it's interesting, small community, but when it first started, all the property were owned by black owners. Now that's not the case now. That's not the case now. It's gradually kind of turning. And a friend of mine whose family had a home there, and they sold it, I think, in the 50s. And he regrets that today. They sold it. So the point I'm trying to make is when we have assets like that as homes and properties, oh, we don't want to take care of it. This is a resort area, it might come back, we don't know for sure. But sometimes we sell things like assets that we regret later on. And that his family is regretting selling that. That's why I'm using this as an example.
Perfect.
You know, it's just an example. But these are some more pictures that I took. But I don't know how, I haven't been up there in a while, a couple of years, but it's interesting. But somebody else put the,
They have a huge,
Oh, that's what I was gonna say.
They have a whole,
They
they
have
have a huge festival
every
Yeah.
year. I know a
yeah,
whole lot of people that go
Yeah.
every year.
Yeah.
Huge.
it's about a 3.5-hour ride there.
Whenever, turn to some, at
Send it.
Jonathan's mom.
Okay, so let's talk about what's wealth. Okay, it's what you own. Think about it. Savings, checking, retirement savings. How many people in the room, the younger people, are thinking about retirement? Probably not.
I am.
You know, us older people are thinking about it, but younger people,
Didn't think about it.
houses, cars, investments, and business that you own. That's what you own. We don't talk about shoes and clothes and all that kind of stuff. These are assets that appreciate. And what you owe, your debt, credit cards, student loans, if you have them, mortgages, and other debt. So wealth, what you own, net out from what you owe. What is wealth is in 3 categories: personal property, homes, cars; monetary savings, your income, your accumulation; and then capital wealth, your investments, your producing assets: real estate, stocks, bonds, and businesses. So, let's talk about this black-white wealth gap. As you've heard, it's not an accident, it's systemic. Goes back to slavery, continues to today. Systemic oppression, institutional racism, which has caused poor outcomes, and this really came about with the pandemic. Black and brown communities, it really came out. It was hit hard, healthcare, education, having to work on jobs, we're exposed to the virus, largest number of people dying. All this because of this black-white wealth gap. Think about it. If you have a good income, you can get doctors. If you work for a company who has a health care plan for the employees, you get, and I'll be the first one to say it, is I got into the routine of getting periodic medical checks because my company that I work for provided that as part of our insurance. So I got into the habit of going to getting my checks on an annual basis. If you don't have that opportunity to work for a company who has a employee-provided healthcare system, you might not do that. Just because it's not in your mindset, you may not be able to afford it. So once again, some of these things are systemic and has caused these disparities in healthcare, education, housing, jobs, and the list is just long, too long. So look at these numbers. In 2019, the average black household, 142,000. The average white household, this is wealth, 980,000. So on the average, 14.5% of the wealth of white households with the absolute dollar gap of 838,000. That's huge.
Wow.
That's huge. And we're not talking about, we talk about, well, how can that be? You have all these football players and basketball players making millions of dollars. But with African Americans only being 13% of the population, they're just a small portion of that.
Wow.
Then you have people educated, a lot of African Americans educated, making great jobs, owning businesses. Still, we're not that large of the population. And so when you look at it, pull the numbers together, these are the statistics. So what's generational wealth? We talked about that a lot. Christy mentioned it, Dorian mentioned it. It's passing down your assets from parents to the children. This wealth may be included real estate investments or even businesses. And this is just my opinion too. As a culture, we don't do that enough. We just do not do that enough. We are a culture, and we've been labeled a culture of spending. Consumers. We're not, and I'm just generalizing here, not everybody's like this, but that's got to change.
Yeah.
That has got to change. That, for us to make any of these numbers that I talked about, that's got to change. That culturally, that has got to change. So then why should black Americans be concerned about building generational wealth? Look at this next indicator here. You can read that yourself. Median annual income for black workers is approximately 30% or 10,000 lower than a white workers. And once again, when the pandemic hit, the service jobs, black population, we were out there on the front lines, in the service industry, and getting affected by that virus the most. I get emotional about these things, so I apologize. But anyway, so why does Dorian have us here? Why are the others here, others speaking on this? What can we do to help African Americans gain generational wealth? Look to the housing market. It's an asset. The market goes up and down. Christy mentioned that, up and down. But long term, it's going to appreciate. Maybe not every year, but 10, 15 years, it's going to appreciate, right? Dorian, Christy?
True.
Okay, so this is interesting as well that I found. One of the most significant contributors to the racial wealth gap is that African Americans are less likely than white Americans to own homes. Now, don't get all down and I see here your sign. There is a light at the end of the tunnel, but it's going to take us to change it. So if you think about it, whether you're single, I know there's some single homeowners in here now.
Yep.
And whether you're a family or whoever the circumstances may be, why is it we're less likely? In my case, I waited too long. I was actually in my 40s before I bought my first house. And that's a little bit too long to wait. Seriously, I'll tell you that. Why? Maybe we don't have the right credit score. Maybe that's the problem. You know? Maybe we don't have enough money saved. There's various reasons. But we have to start turning that around so we can make that change. And we are now more likely than white Americans to own homes. So another statistic here that this actual wealth gap has persisted for over 100 years. And another interesting statistic, African Americans go into greater debt for less valuable homes and receive less of a return on their home ownership than whites. So why is that? Maybe you can't afford a $240,000 house. Maybe in your neighborhood's been redlined. Various reasons. Systemic racism, all going back to what happened in 1619 and 1865. Okay, so what can black families do to help build generational? Simply saving money is not enough. You can't just put it in the bank. You can't just put it under the pillow or under the mattress. And I had to learn that too. You can't just set it and forget it. And that's one mistake that I did. I did that way too long. I invested in my company 401k, but I didn't change the investments because I didn't think that I had the knowledge. But to do that, but there's opportunities to just educate yourself. Find a mentor who understands it. You know, Aaron and I were in a meeting the other day, and it was probably about 15 of us, and there was a financial advisor there. And everybody in the room had different opinions and were working with different people, but the key thing about it was they were all doing something. If you don't do something, you're not doing anything. You know, they were all doing something. Who knows who's got the right answer? You don't, because the market changes, circumstances, pandemics, wars, everything goes upside down. But you can always make a change to what you're doing. But if you don't do anything, you can't make a change. The only change you can make is start doing something, you know. So talk to your children about wealth. Very important. Can't start too young. I think, Aaron, you said, I want to steer the thunder, but you're working on some things locally.
Yep.
And you know, that's a good thing. Talk to your children about wealth, start young. Become fluent in your finances and your wealth. Research, educate, find out what best practices are. Somebody who's done it. Find a mentor. Be proactive in reducing student loan debt if you have it. Don't wait on the government, it might not ever happen. You know, the willpower, and I mean will, financial planning. I will say, you know, with the will, you can go to an attorney, and this, I'm not telling you what to do. You can go to an attorney. You can go online. You can write out a hand note. But if you don't have an attorney, or you just write it out on a note, get it notarized. At a minimum, get it notarized. But the more assets you have, the more complicated those wills can be, and you do need somebody who can do that for an attorney. But if you just don't want to spend the money, you just want to say, gee, you know, I just want to have something. I want to leave my house to my son. That's all you want to do? Write it down, get it notarized, and put it in a safe place. So when you do pass away, somebody has that record. Because oftentimes you hear, well, so-and-so had a bill, or they lost their mind and now we're going to contest it. Because, you know, so-and-so wasn't in the right mind, they were crazy and they were older. Wills get contested all the time. So basically, if you don't want to have an attorney, at least have a document that has been notarized, and it's a legal document.
And I just want to share this one piece. If you are handwriting and you need it notarized for your will, for those of you who are in a discipleship for a second, we have a notary in-house. And anything that's needed at no charge, you just come to the office, see Sister Catherine, and she's able to notarize anything without you having to go downtown and pay for that notary fee. She's right here in-house.
That's big.
That's huge. That's a great service to the community. And then don't wait to start investing, as I mentioned. Create a legal strategy. Develop multiple streams of income. That's all good. Multiple streams of income. Side gigs, gig industry is flourishing. Buy a home, we talked about that, invest in real estate, start a business, learn to mind your own business, know what your business is.
That's a big one right there.
Yeah, yes. Invest in stocks, talked about that a little bit, establish an estate plan. And my last word on this is each family will have their own vision of what they want and how they want to transfer wealth to their family. What I do, what Dorian does, anybody, don't worry about them. It's what is your individual plan. Everybody's circumstances are different. But if you sorry about that. Just decide on a plan of some kind, whatever that means for you. Is there hope for building black wealth?
Yes.
Absolutely.
Yes.
Absolutely. It's the actions we are taking every day, how we're thinking, who we're associating with. Is there a mentor? Is there somebody I can pick up the phone and say, gee, have you done this? If not, maybe I can find somebody, refer somebody else who's done that. Research. I'm a big researcher. If I don't know what it is, get online, figure it out. No, you can't believe everything you see online, but a lot of good information. Continue to educate yourself. Determine your future. Don't wait for the government to pass a law to say such and such and so and so. Social Security for some people in our age bracket, they're talking about changing that. Medicaid being changed. Okay, so you're dependent upon all this. Got to create your own way. How to determine your future, and you're doing the right thing on a daily basis just by educating and thinking. So with that, thank you very much for listening. And if you have any questions, as I said, I'm not a financial advisor, but my business background, I do have a lot of good advice I can share. So thank you.
Thank you.
Thank you so much, Florence.
You are welcome.
Man, I had to stop directing and start taking notes. So that was so fire. Everybody, just remember this is on YouTube as well, because I know I'm going to be rewinding that and taking notes. So she shared a lot of gems in there. Please, you can watch the YouTube replay on my YouTube page, church YouTube page, or on Facebook. But our last speaker for today, and I apologize that we're over just a little bit, and if anybody has questions, I'm willing to stay a little bit longer to answer any questions. But our last speaker of the day is another mentor of mine, a leader in our community, Aaron Lavender.
All right. Doreen, if you don't mind.
Yeah, just I'm going to pull that down.
First, I want to say, I hope we realize what's happening right now. What Dorian did. He brought us together to talk about wealth within our community, in our families, and creating generational wealth. I say thank you, King, for doing that and bringing us together. I want to thank all the speakers who was here before I got up and spoke some gems as well. I hope you guys took what they said and really implement that into your lives. It's important because what they gave you is something that is more valuable than you can ever imagine. A lot more valuable than you can ever imagine. So I come here in the spirit of self-determination. You have to have the desire and drive to be great at whatever you want to do. You must be an expert in your craft. See, America, education is not enough. You must invest in the economy to create generational wealth. Now, you heard the word generational wealth so many times today, a lot of times today. And the thing about generational wealth is you don't want it to stop with the person that created the generational wealth. You want to be able to pass it down for generations to come. Because if it stops with the next person, like my son, and doesn't go down to my grandkids and their kids after, it's not called generational wealth. So you have to educate and give them the knowledge to be able to pass the baton back and continue to pass the baton back. And it takes a village in order for us to do that. It takes all of us. So with that being said, I'm Aaron Lavender. That's just my free introduction. I'm a business owner for over 20 years. I've been in nonprofit organizations for over 20 years. I've been a homeowner for over 20 years. I've been working at Ford Motor Company for 29 years. God willing, I'll be retiring next year. So, y'all can clap that up. Y'all can clap that up. I've just been recently, I'm an author now of a book. I never imagined that would happen. It's called Lloyd Goes to Africa. So, Catherine, thank you for getting my book. You those that haven't get it, make sure you go get that book, Lloyd Goes to Africa. You know, my Uncle Lloyd, I don't know if you guys, Catherine and Bebe know who that is. He's been my role model and mentor ever since I was yay high. I mean, I studied him my whole life. And one of his favorite quotes was, "If better is possible, then good is not enough." So what I take from that is, if you can improve in your life and get better, then good is simply not enough. Because you can say, yeah, I'm good. I'm good. That means you're staying right here. I'm good. But if you want to be better, then good is just not enough. And this is the reason why we're here today. It's to be better. It's to evolve. So I just want to bring all this together. Everything you heard, I just want to bring it all together because it's now what's next. What's the next step? It's your self-determination. You just can't be at this workshop and say, yeah, that sounds good. Yeah, that's cool. But I'm good. No, you have to do something about it. You have, in the words of Fannie Lou Hamer, if you guys don't know who she is, you can go down to check that out. She said, you can pray until you faint. But if you don't get up and do something about it, God ain't going to put it in your lap. Amen. So you got to get up and do something about whatever there is you want to do. She was powerful. You got to go down that rabbit hole. Each and every one of us is the CEO of our own lives. We're also the CFOs of our lives. Money management has 3 elements in my humble opinion. And I want to be quick because I know you guys got a lot of questions and we've been over time, but I want to try to get through this. I have a lot more I want to say, but I'm going to shorten it. I'm going to shrink it up. It has 3 elements, money management. How you make it, how you keep it, and how you grow it. How you make it, you can make money at McDonald's or at a supermarket. How do you keep it? How do you keep the money that you make at McDonald's? How do you keep that? And then from there, how do you grow it? How do you grow it from where you once make it, then when you keep it, and then how you grow it? You ever hear the quote that failure is not an option? You heard that quote. I'm sure we all heard that quote, right? And I had to challenge that quote. I would have to say failure is inevitable. And the reason why I say that is because we've all failed at something in life. Whatever that failure is, right? It can be marriage. It can be in school, driver's training. We all failed at something, right? But here's the key. The failure is not within the failure itself. It's if you don't learn from the failure, it's the failure, right? So you must learn from your failures in order to get better at what you're trying to achieve, right? Or succeed. Everybody's success is different. Your success is not going to be mine. So every failure looks different. But if you fail, don't stop there. And I use this as an example every time I speak. The great Michael Jordan. I think you all, if you don't know the story, but here's the story. And it happened to some other people as well. Michael Jordan got cut from his basketball team in high school. The great Air Jordan. A lot of you youngers don't know him, but you guys might know him from his gym shoes now. And it's amazing that he was arguably one of the greatest basketball players that ever lived. But he made more money off the court than he did playing the game of basketball. LeBron James is going to do the same thing. Think about it. The gift that God gave them, they're going to make more money off the court than they did on the court. Why? Because they had the business savvy to say, I'm going to use the gifts that God gave me, just like you all have gifts, and use that towards business. It's really simple. So when I say failure is inevitable, and if you don't learn the lessons from that, you're going to continue to fail. It's like going through a turnstile. If you don't learn the lessons from it. People wonder why they get in the same relationships over and over again. Because you're not learning from the failure of the last one. You got to continue to learn. And we can't be afraid to fail, but have the courage to succeed in spite of the possible failure. You guys didn't know that Bill Russell also, one of the greatest champions that ever laced them up, also got cut from his high school basketball team. Well, he didn't make the team. So, that's getting cut. Obviously, he didn't make the team. The same went for Carmelo Anthony. Did not make his high school basketball team. But they became champions. Carmelo Anthony in NCAA, and Bill Russell, arguably, no, he is the greatest champion that ever lived. This all ties together. We must train our minds to be open and have a growth mindset instead of a fixed mindset. And that's just within the words. If you don't have a growth mindset, it goes back to being stagnant. Then you can't see the possibilities of what you can be. So that way you can't make any money. But if you have a growth mindset, I never thought I'd be an author. I never thought I'd be doing business with a $1 billion corporation in Africa from Monroe, Michigan. But you got to have a growth mindset in order to believe that you can do it. And once you believe, anything is possible. So this brings me back to why Dorian asked me to come here, because in my life and business, if you notice, I've always been around a lot of people. Whether it's with Never Say Never Entertainment, whether it's Icy Gray, you always see me with a group of people, even in this coalition that I'm a part of. Because building relationship circles and using their expertise, I believe, arguably, is more valuable than capital. And the reason why I say that is, once you get into different circles and you know, like I'm a DJ as well. People know I get out there and hustle, you know what I'm saying? I do all those things. And I will charge less sometimes for me to DJ depending on where I'm at, just the network. Because once you're in that networking circle, you never know who you're going to meet.
True.
I met in New Orleans just recently because I'm a part of my uncle's company. I met the person that's right next to the president of Tanzania. And I sat down and had a conversation with her. Just because I allowed myself to be in that circle. So put yourself in circles that's going to grow you and have a like mindset. Stop staying stagnant in groups that's not going to advance. He talked about assets. You need to create an assets team. Something that will bring value to your life, either in business or in relationships, whatever. And stay away from the L, which is liabilities and losers. Put that to the side, all right? You want to put assets, all right? So, in my 20 years experience, I've been around some of the most successful businessmen and women in the world. And I learned that relationships and networks are the most important tool of creating generational wealth. It must be shared. It must be shared. So that's what we're doing today, is sharing that knowledge to generations to come. So Robert Smith is the richest African American on the planet. He's worth $8.2 billion. And what he said, he is the owner of Vista investment firm. He said, put your actions in view. Use your superpowers in actions to make it manifest. Make it manifest. So what you can dream of, you can manifest it. Trust. I've seen it. I've done it. I've witnessed it. Yeah. We have the gift to dream big. And in my book, I always say dare to dream. That's one of my uncle's favorite lines, dare to dream. So here's why I was here, and I'm going to wrap up right now. That no one gets anywhere by themselves. These big corporations need workers and they need people they can work with. So building relationships is the most important thing I say than anything. and having good relationships. So I created this thing called the 3 T's, right? When it comes to partnerships and relationships. And you can all use these in whatever you do. When you enter into a relationship or a partnership, the 3 T's. You gotta have trust, transparency, and teamwork. Right? Those are the 3 T's of a partnership. So let me take trust. Nothing works, I don't care what you do, if you don't have trust. Everything else is broken down. Nothing else will work if you don't trust the person you're going into business with. You can't get the transparency because I don't trust you. You can't have a long-term relationship because you're hanging out too. I don't trust you. So you can't have any successful business if you don't have the first T, trust. Then once you get to that trust, now you have to open yourself up to transparency, right? You got to open up. What's our bank account look like, honey? What we doing here? You got to be transparent. You got to be open and honest about what you're trying to do.
That's good.
And then once you do that, now the teamwork to advance to what we need to do to make this successful household. Trust, transparency, and teamwork. I always work in 3s when I do stuff. You guys have noticed that in the future. So I encourage each and every one of you today to take what you heard today, really engulf it, let it marinate, go home, and do something about it. Do something about your own life. If you look at yourself and you came here today because you're all here, and I thank you all for being here, because like you said, you could have been anywhere else, but you chose to be here.
Yep.
And I have a company called, talking about partnerships, I have a company called Community Reimagine. I'm trying to reimagine and rebuild this community. And me and my business partner, one of the first partners we reached out to was Pastor Johnson. I thank you, Pastor Johnson. You guys don't know that they were part of this community network that you see, a Wi-Fi we brought to this community. And we got the data back, Pastor Johnson, and over 700 families have been using this data, using this free Wi-Fi within our own community. So it's been working. Come on, y'all give it up for that. Right?
We're using it right now, right?
That's what partnerships look like. That's what partnerships look like. So with that being said, I'm doing a shameless plug. Get my book, Lloyd Goes to Africa. Every book that's sold, guys, every book that's sold is going to give clean water to a small village in Tanzania called Timbahemba. It's Timbahemba. We sent about 9 people over there to do a land assessment of what they needed, and they said they needed clean water more than anything. So 100% of the proceeds is going towards that. So I just want to say thank you. I encourage you to do something about it. Thank you.
I caught you. See, that's what kings do. Appreciate you, King. That was amazing. All right, everybody. So I wanted to thank everybody so much for coming out today. As my brother said, we have gone past time, but I promised to leave time for questions. So I'm not going to leave. I'm not forcing anybody to stay. But if you do have questions, this is the time for it. So that can be a question for myself, for Florence, for Aaron. This is the time for questions. And then we're also going to leave a little time if we have any questions online. So let's start off with questions. You have a question, D?
Okay. Question for Mr. Jackson.
Put the camera.
The question is, I've heard parents build children's credit by putting their children on credit cards at 18 years old. There are certain cultures that I've dealt with in my work environment, and they've explained to me how they build the wealth for their kids growing up early on, is that when they hit 18, they don't give them credit cards.
Right.
They just get an additional credit card with their name on it, and make sure that their credit is being built before they even know it's being built. So when they hit 21 or 22 and they go purchase a house, or they're 24 to go to purchase a house, their credit is already built. Do you recommend that, or is that something, you know?
Yes, authorized users, you can start as early as like 13 years old with your kids. And you can add them as authorized users on your credit card. I would recommend it for sure.
Major gem right there, y'all.
As long as you're going to keep your credit card utilization under 30%.
Don't give your kids bad credit with you.
Yeah.
Good question.
I had a question. You familiar familiar with Unlock? That's for repairing your bad credit. Unlock, maybe
Unlock, no, what is it, like a program, credit repair program or
Yeah.
something? Nope, not familiar with it. I'm familiar with Up the
The
Score.
score, come on,
Enterprise,
baby.
but
That's the best way to answer
credit
that.
repair, I got some cars I'll pass around.
Let's go.
supposed
We
to be
heard
like
of it.
interest free.
We heard of it.
Interest free. And
Well, I'm not sure about that one, but what I do is I just help remove all negative items on your credit report. Student loans, late payments, collections, derogatory marks, all that type of stuff. Go ahead.
Next question is for Dorian.
Give me 1 second, Deke, to get up there with you. Put that Dream Team logo up there, Jeff.
We have an online question too.
Okay, so we'll go to Deke and then the online question. Give me a second, y'all. Jeff, is this still plugged in? This cord? Still plugged in? All right, here I come, Deke. Oh, Deke, you had a question for me or for Seth?
For you.
Okay.
Well, two-part question, Dorian.
Okay.
First question is, I know in 2008 there was a lot of financial firms that went under because they were basically they were giving loans out, housing loans. So there's always been a question. Back in 2008, you had places like Countrywide Loans. So now you have Rock Financial. So what is the difference between Rock Financial and a bank institution per se, Bank of America? Then the second part question of that, our first-time home buyers programs, good, those programs where you have to sit in the class, basically listen to what's going on, they teach you the ins and outs of it, and then they reward you by giving you a substantial amount of money for your down payment. So that's the two-part question.
Excellent question. So, can you name the two banks that you were talking about?
So, what is the difference between a Rock Financial and maybe a Bank of America? What is the difference?
Okay,
between-
excellent question. So I'm going to utilize an example of like Rocket Mortgage and Bank of America. So Bank of America is a depository institution. You literally can walk in the doors and set up a bank account. If you come to me at Rocket Mortgage and you try to set up a bank account, I don't know what to do for you. You know, we're a non-depository institution. So don't leave your deposits with us at Rocket, but we still can get you a mortgage to buy a house. We still can even help you get a loan for a car, a personal loan, HELOCs, refinance your home. But a depository institution, you actually can leave your funds at, save money at. But a non-depository institution, they're going to help get you financing for a specific purpose. So great question there. Second question, it was a two-parter, I believe, was about first-time homebuyer programs. With the first-time homebuyer program, you want to make sure that whatever that program is, because there's so many different programs out there, I'm not going to be able to say blanket, they're all good, they're all bad. But you want to make sure that that specific program, that may be a first-time homebuyer program that makes you take an online class or over-the-phone course, you want to make sure that it's a grant, or you want to make sure that you don't have to pay it back. You know, if it's down payment assistance, ask and make sure that you're not having to pay that back, because sometimes it's just a second lien or something where you're going to close on the home and now you have to pay back your house and pay back another separate loan. You don't want that. You want it to be, if you're going to look for down payment assistance at Rocket Mortgage, contact me. I'm going to help you out because I'm going to vet those companies first. We only work with companies that are not going to hit you with a second lien and leave you with higher interest rates. With our programs that we have and offer right now, we'll get you $1,250 to $2,500, an additional $7,500, but you still get a great credit score or a great interest rate. We're not going to hit you with some high interest just because we gave you a little money off at closing. A good question. All right, do we have another question, Mookie?
I have a question, and I think either you or Ms. Christie can answer this. So, like, with the information that you guys gave on, like, the mortgages, as far as, like, the rates and everything, like, if I were to try to go, like, buy a house, would all those rates apply if I were just looking, like, to buy land, like, acres of land?
Ooh, great question. No, I didn't touch on that. I would say that's a little more high level if you want to get into buying land. But we can take that on the next workshop and continue on to that. But when it comes to financing, if I'm your banker helping out, at Rocket Mortgage, we're not going to provide financing for land. Everything that we provide financing on when it comes to, and Rocket Mortgage can, but it's gonna be more of like a personal loan instead. But when it comes to getting a mortgage has collateral tied to it. So you have to have land and a property. If you're buying land and you're building on your land, that is a construction loan. So you either are paying for the land cash or getting a personal loan to pay for the land cash, and then you're gonna need a construction loan to pay the construction workers to build. And that process is not a simple process. It can be done, but it's not a simple process. You're gonna have a construction worker, construction team, an experienced builder who can write out your architecture and your plan. And then after you've paid an architect, the construction worker, and the team got it approved by the county that you're in, then after the construction's been completed and you've gotten the construction loan, which we don't provide at Rocket Mortgage, but some banks and local lenders will provide that. After you have that construction loan and you pay the construction workers back, then you usually will want to refinance out of that construction loan into one of the programs that I talked about today, like a FHA, VA, conventional mortgage. So great question. It's just a whole different type of loan. It's a construction loan. Yeah. Great question. Do we have any other questions
Yeah,
today?
I got one.
Uncle Sue.
I heard you say 80% of that PMI and insurance. I didn't know it was that high. That seemed pretty high.
All right, so let me clarify that. At 80% is when you can remove PMI.
Yeah, that seemed like that's kind of high. I thought.
You thought it moved quicker than that? Or?
Yeah.
Okay, so no, it's when you've reached 80%. You've paid your principal down 80%. Once you're down to 80% and below, you can get that removed with the conventional mortgage. If you're on the FHA, you're still paying it at 80%.
It's just your principal. It's not your insurance tied into it. It's just your principal then.
Yeah, if you're just paying the interest, that's not, you have to get down to 80% loan to value.
Can you explain, briefly, loan to value, like how that's?
Great question. Great question. So loan to value, if you were listening with the VA portion, you can have 100% loan to value. So what that means is, how much of this is a loan? How much are you putting down? How much equity do you have? If you're putting a down payment down, you're paying for some of the equity. That's your skin in the game. So if you have, let's say if it's an FHA mortgage and you're a first-time home buyer and you have to put 3.5% down, your loan to value is now 96.5. So that is your skin in the game. You put 3.5% in, so now you're at 96.5%. So once you've gotten down to 80 on a conventional mortgage, that's when we can remove your private mortgage insurance.
That's a great call.
But
so the PMI, when you
and actually, Aaron, 1 second before
Right,
I move on to your question, did I answer your question? Because I can tell you still have a follow-up
No,
question.
I was just agreeing with him like that.
That
I
seemed
don't know,
like
it
too
just
high.
seems,
It's
it
too
seems
high,
like
yeah.
a lot.
Because
Yeah, it's unfortunate.
I thought they removed my PMI years ago, and
They hadn't.
I think they have. It's gone, but I don't think it was still 80%. You know?
Yeah, so you want to make sure that you are on a conventional mortgage and not an FHA, because with the FHA, you could be paying that for 11 years. You're going to pay your private mortgage insurance for 11 years, and then it will drop
Oh,
off.
maybe that's what it was then.
Yep, so if it was FHA, if you had a 680 or above, it's 80%. But if it's FHA, it's most likely going to be 11 years. So, great question. Aaron?
Yeah, with the PMI, is it a refi once it comes off or it just drops off?
Excellent question. It automatically drops off at 80% loan to value, but you can refinance and get it removed. Some people, that's what they'll do. They'll call and refinance with the main goal of removing that PMI. Let's say you bought the home with the minimum down payment at 3%, but then you got a big bonus, or you hit the lottery, or you got a raise, or you married that really rich woman, and she wants to put, we can remove that private mortgage insurance and get the payment down now. You have the opportunity to refinance, and when you refinance, at that point in time, you can remove your PMI by putting more money down. Christy?
Could I add an example to that?
Please make it plain for him, and can we get you on camera?
I want to give you guys an example. With the real estate negotiation, for instance, I just did one in January. The home was valued, it was appraised at $200,000. We were able to negotiate for the buyer $176,000 for purchase price. So the buyer, I think, used a FHA loan broker, I'm sorry, it was a conventional. So from what it appraised at, 200,000, to the 80% loan, the value would have been 160. So we negotiated a purchase price of 176,000. She only had to pay $16,000 down in order to be below that 80% loan to value. So this is where negotiating the contracts really is to the buyer's benefit, because this woman walked in with $24,000 worth of equity. So in building generational wealth as well, when you get that mortgage paid down, if you wanted to do, say, I mean, this is Dorian's department, but if you want to do a cash out refi, this is how some people send their kids to college. They pull the equity out of their homes and they send them, you know, to get a 4-year degree. So in this woman's case, because we negotiated aggressively, she walked into buying a home with $24,000. So it can't happen.
Any other questions? Anybody else have any other questions? All right.
There's one on YouTube.
We got one. Oh yeah, we got some online questions. So Kendra, come on up here and read that off for us on camera real quick while I switch this battery. Did you find the battery? Give it 1 second before you read it. I want everybody to hear it loud and clear. Come to the middle too and shout out your business while we wait.
Oh.
Yeah, I show love to my people.
Thank you. I am a first-gen business owner. Your Majesty LLC is my business. I study social work, so it's all trauma-informed, aromatherapy, therapeutic approach. And yes, you guys can look me up on Instagram and YouTube or get a business card before you leave. You ready for the question?
Take that off the screen. Fade. All right, Kendra, we're ready for our online question.
So Khadijah London says, have any of you heard of the Bank of America's First Homeowners Program? And if so, what are your thoughts on the program? Home buyers program, excuse me.
Excellent question. Excellent question from our online viewers. So she's mentioning the Bank of America program that I want to say it was like 4 months ago or so to 6 months ago. Bank of America announced that they were giving, I think it was around $10,000 off of closing costs. So, and off your down payment. With that program, I don't work for Bank of America, so that's why at the beginning I mentioned this is information off through what I know from Rocket Mortgage, and then there's still programs out on the state or local level that you can find. But with that Bank of America program, the same as I stated for Deacon Parker when he asked the question, you'll want to make sure that that money that you're getting off of your down payment and closing costs doesn't come with a higher interest rate. Do you still have an opportunity to buy down your rate? You know, use discount points and get a lower rate? Do you still have an opportunity to choose your own rate? These are questions that you would have to ask when you're in the process of applying for this Bank of America. Khadijah, I know you're the one who asked the question out there online. If you're looking into applying for that program with Bank of America, make sure that you have the opportunity to choose your interest rate, get a nice low interest rate, and that you are not having to pay that money back that they're giving you at closing throughout the 30 years that you're in the home. Because if you come to Rocket Mortgage, we have down payment assistance up to $10,000, and you're not going to have to pay it back. And you still get a great rate. So great question online.
That was the only one.
No other questions? All right. Do we have any other questions in the building? Deacon Parker? And before we take his question, I know some people are heading out. Please make sure that you filled out the physical survey. And you can just leave it at your table. Fill it out, and it asks for your name, your phone number, and email address, because if you have specific concerns that you wanted to have addressed, and maybe you have additional questions, we can reach out and answer that. We can let you know about the next workshop, because this is something we're going to continue moving forward. But also there's a section for 3 names. Please write down 3 names of people that you know that are looking for a home, that you want to see own a home, that you want to see boost their credit score higher, that need a realtor, write down their name, phone number, and if you know it, their email as well. But Deacon Parker had a question in the home?
Put all
In the
three
house?
of my kids on there, put your grandkids and nephews and nieces on there.
Oh yeah.
I think
To
this
get
is
them
a
on
great
camera.
workshop.
Mookie,
I
can you
think
get them on
guys-
camera before you go?
I think the biggest part of this workshop is I think we need to find those 21 to 40-year-olds that I believe will really benefit from it, because most of us adults have already been through it and learned through the hard knocks. And I think this was a really good workshop, especially if we can get the 21 to 40-year-olds. And I think you guys ought to not just take this workshop or leave it here in Monroe. I think you guys ought to take it elsewhere that somebody else can possibly benefit from in another neighborhood, another community. Yes.
Amen. Thank you, Deke, for that dream team up there. Thank you, Deke. I wanted to speak on that before we go off, because Deke, you just threw me an alley-oop, so I appreciate that. But when I was, I'm gonna let Mookie get over here with the camera, because virtual viewers need to hear this too. Because there might be somebody online right now that's not here in Michigan. I know that one of my clients I spoke to in New Jersey, he said he wants to see the workshop in New Jersey. He's a mental health expert, professional, I think he's a therapist of some sort, and he holds mental health conferences. And he told me, hey, I want you to bring that homeownership workshop. I'm going to be watching online. I want you to bring that to New Jersey. So shout out to them and everybody else that's watching online. When I spoke to Florence, when we were first planning and thinking about this workshop and bringing it from a dream into reality, Florence asked me, what is your goal? What does the successful workshop look like? And my number one answer on that was being able to have something that people want to see duplicated in their neighborhood, in their community throughout the United States. So that's the goal, Deke, is to take this same workshop, duplicate it in every major city throughout the United States over the next couple years, or few years. Did we get to all the questions? Did anybody else have any other questions? Deanna, you had a question? Deanna Gray of Great Style, Greatness Revolves Around You. Do you have a question?
Hello.
Oh yeah, Deanna also recently closed on a home and went through me. Beautiful home. What's your question, sis?
Okay, so I didn't have a question. I just had a testimony to my experience. So I just wanted to share. I was living in LA after I graduated. I went to Cal State LA. And I went to school there, graduated, and lived there for almost 10 years. Definitely love it, miss it, and wanted to stay. But of course, with the information that we shared today, it gave me new perspective. Of course, after the pandemic, I had a new perspective of how important it is to be around family and to actually work on generational wealth. It's hard to do when you're across the country. So I also thank Dorian for sharing his testimony, because that's what brought me back home and to look at the situation differently. I appreciate him for leading by example. So I would say that's something for all of us to do. Instead of being overwhelmed by the statistics, I went to school for Pan-African Studies, definitely learned a lot about the conditions that got us into these statistics and how we could break out of them. But it's really, that's what my brand is about. Greatness revolves around you. If you focus on your personal goals and elevate your personal self and lead by example, that's when you'll start to see your circle change around you. The conversation changes. The people you meet are different. Their goals are different. But it really starts with you. And I feel like with the information that we have, if we just see it as being bullet points and goals that we set for ourselves of, oh, okay, my credit score is here, I need it to be here. If we look at it on a step-by-step basis, it feels more attainable to check those goals off your list and then move on to the next step. Reach out to the people that can help, that shared the information today. And I'm just grateful for that change in perspective, because just in the 4 months, I've only been home for 4 months, I've been able to take what I was paying in rent, I'm now paying less than that for more house. It's a blessing. I'm able to see the grass is greener where you water it. So I'm just really grateful for that the help that I have, the family that I have. I'm grateful for my parents being able to help me and put me in position, for my brother to help me and put me in position. And I just encourage everyone else to do the same and just repair and rebuild your own life and just lead by example instead of feeling like you have to go and preach and teach to everybody else. The best thing you could do is just to do it for yourself and share your own experience, because that's the best way you can help your community, in my opinion.
Thank you. You needed that personal testimony. And yeah, that's about it, everybody. I don't want to hold anybody else up. So if anybody else has questions, whether it's online or in person, I'm still hanging out for a little bit after. Ask me. I'm in the community. I'm right here in Monroe. I go to church here at Second Baptist. This is another shameless plug. Feel free to come back to church tomorrow at 10 a.m. I'll run the cameras. That's why I know how to do whatever I'm doing here to present this online. But yeah, thank you, everybody. Let's go buy back the block. It's time now. Homeownership 101. Shout out to all the presenters today. Thank you so much, Aaron. Thank you, Florence. Thank you, Sad.
For real, because we could have added those costs that we just, I just,
We could have got you $10,000
Check out all of the styles.
I mean, we didn't close on.
I can get you, you know, if your grandma has the credit, I can get you $1,250 right here. Actually, you see that?
Yes.
Relaxation. We put them on there.
It is. You know exactly what it's about. Mental health. Have you thought about
you got solar panels.
you know what? Thank you for saying that. I'm going to put that in my notes because I do eventually. They got me for tomorrow. Yeah, it's every Sunday that I do it. It's very successful. Oh, that's good. Yeah, and it's free too. Pastor is good at that. Like, people let us know space. Yeah, it's really a good platform. It is. And I'll see people and everything on that. Make your budget. I'm going to see which one you make.
I know also
people want to relax.
Wow.
I mean, people, the reviews that I get stun me, and I have a lot of anxiety about starting this.
All right, go ahead and stop the stream.
He's like, he has a business.
I don't know that it was